Welcome to Unfiltered Finance. I'm your host, Emily Turner, and joining us today is Jeffrey Turnmeyer. And we are talking about cryptocurrency coming out of 2025, going into 2026. Jeffrey, it's been quite the year. I mean, how would you explain kind of the path that cryptocurrency has taken?
Well, it hasn't, when you talk about crypto, most people know about Bitcoin. That's kind of the king a la king of crypto. It's, 70% of the market right now for crypto as far as market cap goes. And from the very dawn of Bitcoin, we've had a 4-year cycle that's remained intact. It's called the halving cycle. Well, it has to do with the mining and how the Bitcoins are put out into the world. And we went through one of those halving events in 2024. And, roughly 12 to 18 months after the halving, we usually make a peak. And all the way back before that halving event, I was predicting that early October 2025 was going to be the peak. And I missed it by 2 days, years in advance when I made the prediction that we would top. And big bummer, I missed it by 2 days. But now it's like possibly we're going to be in a consolidation cycle for 12 months from October to possibly October 2026. And that could be a choppy pullback kind of period for crypto and in general. And it's usually referred to as crypto winter if you're winter, as in cold, a chilled off period in crypto, reduced interest, kind of sucky price action. That might be what we see for the next, 10 months in 2026.
So, if you just had to sum it up in like one sentence, how would you describe crypto right now?
Right now, to put it bluntly, mildly, sucky. It just kind of sucks right now to be a crypto trader, especially looking at it and knowing that there might be more downside than there is upside, at least for the next 10 months or so in the year. This failed breakout we did this week just adds fuel to that fire that we're probably in some sort of consolidation. It really makes me nervous. We're going to see an immediate dip to 75,000 on Bitcoin. And that's going to bum a lot of people out. Now, I have a saying that when price action sufficiently bums out enough people, we can actually make a bottom and go higher. And that doesn't mean that we won't see a multi-month rally between now and October of 26. But I don't think we're going higher high right now, at least not with the current price structure. Now, anything's possible, but right now the price structure looks like we're going to do some sort of correction to a lower high, and then probably bleed it down to a lower low later this year.
Oh boy. So, like, buckle up until when? The end of 2026?
Possibly. I mean, right now I'm looking late summer, early fall, maybe out to October. Typically the corrections on the 4-year cycle have lasted 12 months. We topped early October. That leaves us, late September, early October as the 12-month kind of window for that correction to take place.
So is this a hair on fire situation, just like sell all of your cryptocurrency right now, or is this a hold on to it and then just ride through the dip?
Well, it's really a personal situation, right? Like if you can't handle a pullback, if you can't handle being upside down, you can't dollar cost average, you can't, you went all in at the top, you're down 30% right now, and you're like, I don't want to be down 50%, I don't want to be down 70%. The next bounce we do, you should probably look at salvaging what you can salvage.
Yeah.
And that's kind of the tough breaks of the crypto market.
Right, right. I mean, it's you don't have to go to a theme park to be on a roller coaster with cryptocurrency. But it's interesting though because you see in the headlines, okay, J.P. Morgan or well Morgan Stanley and Stripe's going to incorporate cryptocurrency, Shopify. All of these things are expanding in the cryptocurrency market where it used to kind of just be its own thing. I mean, do headlines like that affect the price tag?
We've had this age of adoption, is what I've called it for since I've been a guru talking about cryptocurrency for nearly 5 years now. I've called it the age of adoption, and 4 or 5 years ago, not many people in the United States had heard of anything but Bitcoin, and now you've got companies like Shopify starting to add stable coins to your ability to pay. A lot of people still have no clue what that means. If you go, we traders love to, surround ourselves with people that talk the same language. We speak the same thing. We look at the same, we follow social media with crypto. But if you go ask your mom about a stable coin, yeah, your mom's not gonna have any clue, right? I mean, yeah,
No.
my mom's not gonna have any clue. Um, so if they saw that button on Shopify, on a Shopify store, what are they gonna do? Like, they're not gonna click that button, or if they do, they're gonna be like calling, what did I just get myself into? Um, so commonly maybe 12% of wealth managers and stuff have any crypto exposure right now, even though it seems like it's really saturated. We're still in a big age of adoption. And I think that's what we're just still on this cusp. We haven't really gotten to the top of the hill where the ball is going to start, really rolling and bringing everybody in. I don't think. I think we're still working on, trying to get over the hump.
So
And
these moves are more just normalizing it, making it part of the daily lexicon and awareness. They're not really going to drive anything when it comes to the actual market.
right now we're seeing opportunity. If you're an early believer, if you're an early adopter, if there was the early stage, now we're getting to the point where things are starting to get a little more solid. JP Morgan's actually did a big bond deal where they settled everything on Circle. And then they're using stable coins to actually settle, to actually start tokenizing some of their real world bond assets and stuff like that. And DTCC, which is the company that holds all the shares of everything, from Apple to Tesla to, they hold all the shares of everything, and all the brokers just hold digital certificates of that. Well, DTCC just got the clearing to tokenize all of their shares to now all of a sudden push that out and let the settlement be even faster than T+1 that we now have. So this is all like in the works. It's not going to happen overnight. It's not going to happen in 2026. It's like all these things are coming together and coming together, and this presents opportunity. But that doesn't mean it negates crypto winter.
Right.
Maybe it mutes it a little bit this year. Maybe instead of we've gotten up to an 80% drawdown in the past on the 4-year cycle. Maybe this year it's only a 60%. Maybe we're halfway to the bottom. Um,
Could be
I think
interesting if you're
as
looking to buy.
Yeah, and it presents opportunities to buy on dips, like Coinbase on big dips. You might be able to buy them because they're one of the big processors. They're one of the big holders. Um, you know, the the banking charter just approved for all U.S. banks to be able to hold Bitcoin for their clients. We're not talking about just Bank of America, J.P. Morgan, Morgan Stanley, Goldman Sachs. We're talking about 5,000 local community banks, like your Mountain Commerce Bank, your First Tennessee Bank, your First National Bank, wherever you are. Those little bitty banks that only have a handful of branches. Now, they don't have staff to go in and implement Bitcoin holding, right? And custody and solutions like that. They're going to hire crypto.com. They're going to hire Coinbase. They're going to hire these companies that already have an out of the box solution that they can just plug into their website and let their clients buy crypto. That's part of the age of adoption. This is all these pieces are coming together. And I feel like there's still a lot of upside to go in the future, but we're going to have to get through this sucky period here in 2026, I feel like, before we get to the next leg again.
What is it that makes cryptocurrency comparative to maybe other sectors of the market so much more volatile?
I think it's just emotion. It's driven solely on human emotion. And because things can happen just on a whim, and there's no centralized, control, there's no centralized, anything. It just lets everything just flow on human emotions. And I don't know if if you remember being in high school, there was a lot of human emotion that went on. And when you let that unbridledness happen, you see it online look on Reddit. You see a lot of human emotion just come flowing out. So when you don't put some sort of rails on the system, you get these big ebbs and flows, and it's just human emotion coming through in the charts. And I feel like that's what really drives crypto to these big emotional swings.
One of the things that's coming up January 15th, there's a review period for the Clarity Act, which is basically the federal government, coming up with how they regulate and kind of how they handle cryptocurrency. I mean, without getting into the nitty gritty and the specifics of the legislation, what does regulation do for cryptocurrency that is so up and down all over the place? I mean, is it going to squash that so that it's not
Yeah,
so extreme?
Yeah, that's what I feel like. I feel like, well, you look at big investment banks, retirement accounts, and stuff like that. They don't want high volatility. They don't want it to be up 60% today, down 30% tomorrow. Like that's not when you go pull up your retirement account, you don't want to, be up huge today, down huge tomorrow. That doesn't feel good here. That doesn't feel good, like,
That ties up your phone lines with your clients.
yeah, yeah. People that check in at once a year or once a week, once a month, they look at that and they're like, what are you doing with my money? And, so really, as we get through this age of adoption, these bigger banks and bigger clients, as they get involved, they need this volatility to come down. And I feel like through the Clarity Act, through the Genius Act we passed last summer, these are putting rails on the system that are going to help bring the emotions out of it and bring more stability into the system. We may see, less big swings. And like I said, the drawdown this year may be smaller than we've seen historically. Every one of them's gotten a little bit smaller, a little bit smaller. This one could be drastically smaller, maybe just by the sheer number of players, the ETFs that are in there, the treasury companies that are buying the dips, countries are buying. Florida just passed regulation to start a treasury with up to 10% of their state's funds, and they just approved that like this week.
And there's so many question marks about how much cryptocurrency does Venezuela have and what are they sitting on? I mean, it's, there's a lot of question marks and all sorts of stuff out there.
Yeah, and El Salvador added a Bitcoin yesterday. Like that's just like they keep stacking their coins. So it's it's this interesting. We've not had anything like this before. Gold has existed as a means of transferring wealth between people from the dawn of humans. Shiny metal like this, but here's the thing. Gold is still mined. We still discover gold every day. And, there's companies out there that mine. There's a show on Discovery Channel about mining gold and finding gold. And there's a certain, what I call an expulsion rate, where we pull gold out of the ground and put it into the market. For the first time ever with this halving event that Bitcoin did, Bitcoin is now more rare as far as the amount of Bitcoin hitting the market than gold. Never in the history of humans have we ever had a commodity that was more rare than gold. And you think about that for a minute, like what kind of thing does that open up for us as humans? It's it's like I don't know where that's going to go, but that could be something that turns into something really big.
Well, and it's also not something you can like hold and touch, which I think for so many people is the part that makes it, hard to comprehend.
Yeah, and it gets even crazier because none of the Bitcoin ever moves. It's all on the ledger. And it's just about whose wallet has the Bitcoin allocated to it. And when you talk about taking your Bitcoin off exchange, all you're doing is taking your keys off the internet. Your Bitcoin's actually sitting in the ledger and it never moves. All it does is move from one person's account to another person's account, and that's what they call the blockchain and the ledger, the block ledger. It's really difficult for a lot of people to realize that all the Bitcoin that ever exists is all right there and it never moves. Actually, it just it's kind of like what the government does with our U.S. dollars. They just move the number from your account to my account, to the IRS and back to you. It's a lot of those dollars I never see them. They're just numbers on the screen. So yeah. Bitcoin works a lot the same way.
Well, so for folks who may not necessarily know, I mean, what's your background? You have an extensive background when it comes to cryptocurrency. Walk us through kind of the abridged version of what that is and why you do know so much about this.
Yeah, I joke around and call myself a professional nerd because I have an engineering degree, civil engineering. I'm actually a registered professional engineer in the state of Tennessee, and just my nerdiness. I got sent the white paper like within a day or so of when it came out back in 2009, and people were like, "What do you think about this?" And I was like, wow, this is going to be the biggest Ponzi scheme ever. I mean, I was a skeptic from day one. Like, quite honestly, I looked at it, I was like, yeah, this is bullshit right here. I mean, like, quite honestly, it took me a good several years, almost 4 years to come around. It was 2013 before I really decided that maybe I could get into mining a little bit of crypto. And I opened a mining account, started dabbling in it. I didn't have high-end machines. I didn't have big GPUs. I wasn't buying the top-end gaming computers to do this with or anything like that. So I was just, getting a very small payout. And rock along in 2018, we were in another crypto winter. Things were sucking again, and the mining equipment, things had gotten really hot in that last cycle in 2016, and people bought lots of GPUs. And in 2018, when the price came down 80%, GPUs were cheap. I bought quite a few of them for a pittance, or what it seemed like a pittance, and I started putting that to work mining Ethereum, which at the time was proof of work, and it paid out. I was getting $5 to $10 a day. I was renting my equipment. I wasn't even mining it directly and getting the crypto. I was renting my equipment to people through a online marketplace. They were paying me in Bitcoin to borrow my equipment and mine Ethereum, and I was getting paid like $5, $10 a day in Bitcoin, and that was in 2018. That kind of number. Fast forward, that I've still got that Bitcoin with zero cost. It's getting to be $40,000, $50,000 worth of Bitcoin these days. I'm not stacking hundreds of Bitcoins, but this is substantial money though. And I'll probably hold on to that coin forever. Um, it's, but then I also, along the way, picked up a client in my engineering business that wanted to and expand a Bitcoin mining facility right here in Knoxville, Tennessee. And, you know, th- this is hard for a lot of people to imagine, but they bought an old closed down Panasonic facility here in one of the industrial parks, cut out the sides of the building, put in these big fans and louvers in the side of the building to blow the heat out, and stacked it like Sam's Club racks, floor to ceiling, with these little computers sitting on all the shelves, floor to ceiling, and they just blow the hot air out the side of the building. And they sit there and suck down megawatts of power mining crypto 24/7. And this is just one little facility. There's, dozens of these all over the country, all over the world, if not hundreds. And this one's run by Ant, which is they make the Ant miners that everybody talks about, like the S19s and S21s and stuff like that. This is actually owned by Ant through, I guess, subsidiaries and LLCs and whatever. I dig we as part of our due diligence, we dig in and find out who we're working for, and we read the deeds and stuff like that. And it was pretty obvious who was fitting the bill here. Funny enough, they offered to pay the contractor we were working for in Bitcoin, and he turned it down. And 6 months later, he figured out that he should have taken Bitcoin. He was like, they were going to pay me 20% more of Bitcoin. And then I looked at what it went up from the time I wrote my contract to the time it. He was like, that was the stupidest thing I ever did was turn that down. He
Yeah,
wanted
missed
cash.
opportunity.
But yeah, so we helped expand outside of the factory, puts more building more containers on the property so they could put more transformers out there and hook up more miners. And they've pretty much maxed out the substation they're pulling off of um, from the local utility. But
Wow.
they were getting sweetheart deals on power. And so I've been in the professional end of this. I've been in the commercial end. I've been doing it myself. I've traded crypto along the way, and um, so I have a pulse on the market, all the different aspects of crypto. I'm not a banker. I don't try to implement banking for anybody, but short of that, just the trading and the actual, understanding the ins and outs of what happens, mining crypto, dealing with crypto, transferring crypto. I kind of have a pulse on it a little bit.
Well, I mean, it certainly sounds like it. So when it comes to for any parting thoughts, like for the folks who are watching, what do you feel like the big takeaway? What do you want people to know going into 26 or as we're in 2026 about the cryptocurrency market?
Well, I think a lot of people got bummed out in 2025, and the markets have this special way of sufficiently bumming out everybody right before it makes a bottom and provides the best opportunity to get in. So right when you see a lot of the headlines just talking about how trash Bitcoin or crypto is, how, when people are just peak bearishness or peak, blood in the streets about crypto, that's probably the big opportunity. And I feel like there's going to be some of those opportunities coming up in 2026 if you're paying attention. If you're sufficiently bummed out about it and you have your blinders on, you stick your head in the sand, I don't want to hear about crypto because it sucks because we're down 30% off the highs and maybe more, you're going to miss the opportunity. So there will be opportunity. I feel like it's coming up in 2026. We'll likely, if we're going to continue this crypto winter, it'll likely make a bottom in 2026. It's not going to give you that opportunity later. So that's it's kind of my big takeaway right here is there's going to be opportunity, and now's the time to pay attention, even though it seems like it's sucky.
All right. Good advice. Well, Jeffrey Turnmeyer, thank you so much. And thank you guys for watching Unfiltered Finance. Be sure to leave a comment below about what your thoughts are, where you think cryptocurrency will go. Like and subscribe.